You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, our weekly sojourn into all things crypto trading. We're talking, of course, the options, wherever you can find them, but also the spot underlying, the futures, all the other fun stuff you could find in the world of crypto. My name is Mark Longo from theoptionsinsider.com, the brand spanking new theoptionsinsider.com. Hopefully you guys have had a chance to check out the new coat of paint up there, as well as all the cool stuff going on under the hood. If you haven't done so, head on over to theoptionsinsider.com. Check it out, kick the tires, and light the fires, as they like to say. Let us know what you think. We do love to hear from you guys. You guys, of course, can join us for this program every Monday live, 1:30 p.m. Central, 2:30 p.m. Eastern, or after the fact, wherever you find your favorite podcast programs. I'm sure however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do, yes, indeed, we do like to hear from you guys. And you guys know I always enjoy a good guest on this program. So without further ado, let's get right to it with our Crypto Hot Seat segment.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody. Welcome to the Crypto Hot Seat, the portion of the show we welcome on guests from throughout the world of crypto and proceed to pick their brains for the benefit of you, the listener. And I'm pleased to be joined now in studio by our next guest. He's a newcomer to the program and indeed to the network. He is Jason Urban, the CEO over there at Drawbridge Lending. Jason, welcome to the program. Welcome indeed to the studio, sir.
Hey, thanks for having me. This is great.
Well, Jason, as we are wont to do with all of our first-timers here on the program, why don't you give us a little bit of an overview of your background in the financial space and how you found your way to starting Drawbridge Lending?
Absolutely. So myself as well as my team, we are Chicago institutions in a way with one of my partners anyway, who have been in the options, futures, derivative space for a long time. I started here with Hull Trading, ultimately with Goldman Sachs, running the index market making flow desk for about a decade, and then went and started the same business over at DRW, where I've been for the last 10 years, until starting Drawbridge in May of last year. And I think the impetus for doing that was when I think back to the internet age, and I never believed that the internet was going to catch on. I thought, people will use it, but are they really going to buy a shirt or buy clothes? They're going to want to go and try things on. And here I am. I missed that train, and I swore I was never going to make the same mistake. And so when crypto came on the scene and talking to people, and especially people that I was working with at DRW at the time, I was skeptical, but I swore I wasn't going to make that same mistake twice, and kind of got into it, kind of learned about it, and when the opportunity came to start this in May of last year, jumped at a chance to go out and do something different in the space.
So yeah, it is something different, definitely, because we've covered many different aspects of the crypto space here on this program, on the trading, on the vendor, on the exchange, on the aggregator. You name the different facets of the crypto market. We probably had someone in here talking about it or on the show at one point or another. We have yet to really discuss the lending portion. But when you think about it, it's a fundamental part of the space, right? It's a part of every other financial marketplace. So why wouldn't we talk about it in crypto? So let's get to it, Jason. Obviously, the name kind of sends it all, but what exactly do you guys do over there at Drawbridge? Can I come get a house loan with you guys? What do you guys do?
Well, you can, if you want to post up your digital asset, you can get a loan from us. That's effectively what we do. We are a secured lender, and at the end of the day, what we're trying to offer holders is a way to monetize their asset. While people believe that someday digital assets are going to be ubiquitous in the market and people will be able to buy a home or buy anything for that matter with their digital assets. Today you can't do that. So people who do hold these assets need a way to monetize that without selling. If you sell, you incur a tax position, you obviously lose your underlying holdings. This is a way for them to get the cash they need today, but in a way that makes sense. And where we differ from the other participants in the space is we try to use some of the traditional tools that are available in the market, like options, futures, things like that, that allow us to manage and mitigate risk and ultimately offer a better rate to the customer.
So effectively, you've created a business for the hodlers out there, right? People who don't ever want to sell their crypto, right? They come to you and they say, "Hey, can I get a bit of a loan against my?" Was that the impetus there, or was there something else?
Yes, I mean, effectively, it's not just the hodlers; it's miners, it's institutions that want to get leverage. Right now, if you buy a stock, you can get leverage on that stock. If you have a future, you only have to put up the initial and variation margin. That's not the case necessarily in crypto. And what we're trying to offer is a way for people who hold these assets to get some buying power, some leverage to either buy more assets, to buy other assets, to run their business, to manage. And where we differ is that we layer on options and future strategies that basically bring that rate down to what you would see a more traditional rate, call it, or even lower, Fed target type of interest rate to borrow crypto. Which I think when you look in the space is not really there. And given the volatility of the underlying asset, I can understand that.
No, yeah, the traditional margin rates, I think they use that term loosely, in the crypto space are nowhere near the Fed rates. So you're right. If you're offering that, that is certainly something different. Now, I joked about the hodlers, but what is the typical use case? Are people coming to you to get some cash so they can then in turn buy more? Is that the typical use case, or what do they want to just have get some liquidity out of the positions they've been sitting on for a while? What is the typical use case they're coming to you for?
We've seen a lot of success with the mining community. They've been they need to refit or expand as the opportunity grows in the space, and so they've come looking to monetize their holdings. We've seen some funds come in and say, "Hey, I would love to get longer, or I would love to redeploy or get yield enhancement. If I can borrow from you at 2% and I can buy some pretty safe instrument in the market for 5%, I net 3% and I can outperform." So at the end of the day, what we're offering is a leverage opportunity for anybody in the space.
Would you say it's primarily retail who are coming to you, or institutional, or a mix of both?
We are strictly institutional, and that's because of the structure of some of our products where they have a swap embedded in them, and therefore, because we are CFTC registered and regulated, we need to make sure that we're compliant with all those rules, and that means dealing only with ECPs and QEPs in the space.
It's funny, interest rate type option strategies are on everyone's brain these days, I guess because of the rates. We just did our big show with Fidelity about an hour ago, and that's a retail-oriented show, and we were talking box spread. Go figure, boxes on a retail show. I never thought I would hear that in a million years, yet apparently that's what people are calling up Fidelity asking about these days, which is mind-boggling and maybe a little bit scary at the same point. I mean, a lot of guys I know who are still on the market making side tell me they won't even quote boxes anymore because the capital rules are so insane. It doesn't make any sense for them to quote those, but people apparently on the retail side want boxes. So let's talk about that a little bit. You mentioned kind of some of the options and things you're using in your structure as a way to kind of mitigate your risk and also maybe give your end user a bit of a lower rate. I was just joking about boxes, but what are you guys doing out there to help mitigate the risk for you guys?
So if you think about as someone who holds a digital asset, what can they do? They can sell it, they can borrow against it in a very traditional sense, or they can write some kind of a strategy. They can lend it out, which is a lot of credit risk, or they can write an option strategy where they sell a call, buy a put, do something along those lines. Because of how we're registered and regulated as a CFTC regulated entity, as well as a non-bank lender who can lend money in 49 states, we're able to offer both a loan as well as an option strategy. So at the end of the day, we're doing some very traditional things. We're buying puts and we're selling calls. When we sell the calls, we are using that income to buy the rate down to zero, as well as pay for the insurance of the put. And in return, we're able to offer a loan basically struck where the put is, and able to offer a rate that's 1, 2, 3%.
So do you think that's what really sets you guys apart? I mean, obviously, there's not many people in your space I can think of to begin with, but if there were, let's just hypothetically say you had a legion of competitors out there, do you think that some of the options background is kind of what sets you guys apart from some other potential players in space?
Absolutely. I think that at the end of the day, anybody can go out and buy a put or sell a call, but to manage it on a global perspective, to manage it on a large portfolio, takes a little bit different skill set and experience set, and I think that's what separates us. Most people who are in that space, who have that background and have that skill set, don't naturally migrate towards lending money. They say, I'll just trade for my own account, I'll make it work for my own account. I'll market make, I'll set up a fund. We're using those skills to lend money.
And I like having people come in here who are in the crypto space now, but who come from, let's say, the options markets or other more. It's hard to think of options as a traditional financial market, but compared to crypto, they are no longer the new kids on the blocks. I'd like to ask everybody, and you kind of touched on it earlier, but I'm kind of curious, everyone has that moment, right? That inflection point, that eureka moment where they say, hey, this asset class may be more than I thought it was initially. Maybe I certainly was skeptical when I first started hearing about it really in mass. I'd heard about it tangentially for years, never really paid attention to it. But when it really started reaching critical mass, that's when I started to get a little bit skeptical. But I'm curious, you kind of mentioned your time at DRW. We got some other guys in here. I think the ALTCOIN guys are also, former DRW guys as well. Was that what did it for you? Was that what lured you to the dark side of crypto? Or what exactly was that eureka moment, that inflection point for you?
Well, it's funny because I was at a dinner and I was sitting with a couple of guys that I worked with, and one of them was very active in the crypto. And he turned to somebody, and it was a small dinner, 10 people, and he said, "Hey, I just bought 100,000 Ether for a quarter." Tells you when this happened. It was a long time ago. And I was like, Ether, and I started asking questions, and was very skeptical at first, but that was when I took that stance of saying, hey, let me think about this. And as you start to hear about it, it's kind of something that doesn't make, if you're looking at everything with a U.S. mindset, you say, well, why do we need digital assets? We have a sound banking system. It's very, there's no need for that. But if you're coming from somewhere else where, if the Chinese government can make the head of Interpol disappear, they can certainly, if you're a well-to-do person, it just makes sense to put a portion of your assets into digital currency. And to take it one step further, as the largest economy in the world, why wouldn't we embrace that or transact in that in some way, shape, or form? And that's going to evolve over time like anything else.
Speaking of evolving over time, these markets certainly have evolved in a very short space of time. We were it seemed like it doesn't seem that too long ago, we were threatening the 3,000 level on the Bitcoin. Of course, the last month and a half, we've seen a market increase. The worm has turned from that low 3,000s up to threatening 9,000. Just in the past, since our last show, we've seen it threaten 9,000, break back down to around 7,500 or so, back up to 8,000. It's been a fascinating time, but definitely the net change has been on the bullish side. I'm curious for you guys in the lending space, has this been a big upswing for you guys in terms of interest? Or maybe is it conversely because now they can get a better exit point in the marketplace than they used to? Maybe is the need for a loan against their assets, is that maybe less of a draw? How has that impacted you guys?
Well, it's certainly been we've seen an uptick in business. It was kind of counterintuitive to me. I always thought if digital assets, Bitcoin's at 3,000, the last thing someone wants to do is sell if they need cash. They'd take a loan. But in reality, they've, at that, they were kind of at a very scared point, right? Is this thing going to zero, and did I ride it all the way up and ride it all the way down? Now that we've kind of normalized and have started to grind higher, I think people are now saying, hey, this is here to stay. I can feel safe. I'm more than happy to take a loan and borrow against my holdings to either buy more holdings, to expand my operations, whatever it may be. So initially, if you had asked me, I would have said, hey, we're not, and we still might not be as subject to flat price moves, but we are subject to that to the extent that we've seen an uptick in business with the increase in price.
And that makes sense. We've seen the interest really explode just with the underlying. People were they were stuck in a bit of, that extended, what was it, about 18 months, something around that level, protracted, the longest bear market in crypto history, certainly had impacted a lot of sides, including the institutional space. So where you guys play, we have a lot of people come in here on this show and sit in that seat and talk about interesting, maybe different, maybe contrasting things they're hearing on the institutional side of the space, particularly when things were looking pretty dire, that a lot of the firms were out there, maybe saying one thing in the press and the media, saying they weren't really particularly interested in crypto, but behind the scenes they were doing something else. They were staffing up, they were getting ready for maybe the worm to turn, which it certainly has. You play pretty much exclusively in the institutional side of the space. So what has that been like over the last year and change for you guys as you watched Bitcoin threaten those new lows? Did you see the institutional demand somewhat ebb? Or has it been pretty much steady? Obviously the uptick recently, but aside from that, was it pretty much steady? You saw the kind of firms who were committed and they were staying in the space, or were they even maybe starting to get a little bit spooked as we saw the continued downswing? What exactly were you hearing from the institutional side?
Well, on the institutional side, I think it's been consistent, right? If you're a large organization, you don't just move overnight one way or the other. So once you've kind of committed, you can't stop midstream and turn around. So to the extent that you see large groups, like the CME, like Fidelity, and some of the other big players, obviously ICE, who are out there doing this, they're not doing this on a whim. This isn't three guys in a garage with a calculator figuring they're going to enter the crypto space. These are large, publicly traded companies. So we've seen that. We saw that throughout. It didn't make crypto winter any better, but we certainly saw those guys interested, asking questions, continuing with their plans, some publicly, some not publicly. But they are behemoths, and they don't enter and exit slowly. Once they're in, and you'd like to see them move faster at times. Obviously, I know we've talked options, and we'd love to see what the CME can do, but in due time, I'm sure.
Was there ever a moment for you personally because you launched this pretty much right in the beginning of the sell-off? Was there ever a time you said, "Oh my God, I missed this. What have I done? I've hitched my my wagon to a dying horse"? Were there ever any dark moments of the soul for you during that long crypto winter?
Well, there's always dark moments of the soul with a startup, but it was funny because we said, hey, if we could just settle in around 6,000, this would be great, because we were a little bit later than some of the people that initially stepped into this space, and we believe we have a better mousetrap, so we just wanted a little bit of time. And so hanging out at 6,000 for all those months, it was great, and then all of a sudden the bottom fell out, and that was kind of one of those oh no moments where you're looking at it, you're saying, geez, we're getting lower, we're getting a lot lower, what's going on here? But that also, once you rode that out, you felt very confident that you made the right choice.
Right. It's always challenging of the startup to begin with. And on top of that, to have your core underlying asset continually eroding, I'm sure it wasn't a morale booster in the office. I'm sure.
No.
For you guys. I like to have guests, like I said, coming into this show and into the studio here from the traditional Chicago options markets, because for me, one of the more fascinating things I've been watching as the evolution of crypto, particularly here in Chicago, it's really landed like a bomb here. The trading firms have really taken up. We've become effectively the last couple of years. Chicago is certainly on the derivatives and underlying, but even a lot on the core crypto trading side. It really has become the crypto trading mecca here. And to watch, let's say, shall we call it the old school infrastructure of the floor traders and exchanges migrate over to that side of the space where they're bringing their knowledge of risk management and traditional finance and things like, regulation and then bringing that into, let's say, a much more Wild West, much more unregulated, free and loose kind of space like crypto, which effectively started on like a tech anarchist movement effectively, and then has kind of migrated now into a more mainstream context. You have these two worlds very much colliding, and they don't really see eye to eye all that often. So for me, it's been kind of fascinating to watch these mindsets kind of come together. You're literally navigating those waters right now with your firm. What's that been like to you to watch those kind of two worlds come together, sometimes work together, often collide? What's that been like navigating those waters for you there?
Well, it's interesting. You talk about compliance, you talk about regulation. That's something that we embrace. I think that adds legitimacy to the movements in general. And for us, that's a paramount. Our business is built on two pillars. One is compliance and regulation, one is risk management. And so at the end of the day, to bring those two things, that's kind of what Chicago does, right? If you think about the history of options, derivatives, all of that, deals are done in New York. Chicago is always priced risk. And there's no riskier asset than a digital one right now. With vols where they are and the way that it moves, you need professionals who have the models built, who have the experience dealing in volatile markets where risk is paramount, where you can be carried out at any given point. You want to make sure that you have the right tools in place, and I can't think of a better place than Chicago where that talent set exists.
Well, you mentioned the volatility in the movement, so let's get to it with a little bit of our Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where the name pretty much says it all. We break down the week that was and indeed still is on the crypto spot and the futures and the options and everything else, the volatility, the skew, all that good stuff. And oh, what a week it has been. Since our last show, we've been there and back again, listeners, in terms of the overall Bitcoin levels. Net on the week here, we're off right about a little under $500 from where we were last show. Last show, we were at about almost exactly 8,500, 84.99, and coming into the show today, we're at right about a 79.50 or so out there. It's a little over $500 out there in Bitcoin land right now. In fact, if you look back 2 weeks, we're almost back to exactly where we were on the show 2 weeks ago. We were at a 79.14 on the show, and coming in, we were at about a 79.30 odd about a half an hour ago. So it's been moving a little bit today, but definitely a turbulent couple of weeks, threatening 9,000 to the upside before coming back down, breaking through 8,000 again on the downside, getting all the way down to around 7,600 before reversing again, breaking through 8,000 again, and then settling out around where we are right now at the 79.5 or so level. Of course, not surprisingly, all that turbulence over the month of May generated some volume, generated some paper over there on Coinbase. They saw their biggest volume pretty much since the go-go days of late 2017, their highest volume in 14 months this May. They facilitated, as they say, 738,000 Bitcoin worth approximately almost $6 billion, $5.9 billion. That's at the current market prices, obviously. Some of those were done a little bit lower levels, obviously, but the net, it's around $6 billion at current prices. In case you're wondering what is the biggest day in Coinbase, or month, I should say, in Coinbase history, it's, of course, December of 2017. Remember, we were right on that march to 20,000 back then. CME and Cboe were racing each other over who could list the first future. There were crazy days, and that's when it did. Looks like not quite twice, but looks like pretty close to twice the amount of volume. Even on a record May. May looks like it's definitely the highest in a while, over a year, about 14 months. So a good month, not quite December of 2017 levels, but still a lot of interesting stuff. Speaking of interesting things, let's go over to our friends over there at SKU. That's SK3W. You've heard them on the show. They have great data. And if you're looking at these markets, if you're listening to this show, first off, you should be using it. It's completely free. Check it out, sk3w.co, not .com. And you can find all this great data here for yourself, including what we're seeing out there. 30-day realized out there in Bitcoin continues to tick up. That's not a surprise given what we're seeing out there in the underlying. Just not too long ago, it was in the 20s. Then it gapped up to the 40s. Then it was in the 60s. Then we're in the 80s. Now we're at almost 100, listeners. 95 coming into showtime here for 1 month realized volatility out here in Bitcoin. It's up from an 89 just a week ago. So it continues to climb, but we're seeing the movement to merit it. Remember, realize is what's actually happening in the marketplace. You know, we could pull implied too, but that gets a little dicey on which venue you're looking at, and they could vary wildly depending on the venue. But realized is inarguable, which is why we like to look there. In terms of venues and volume, Deribit's one of the leaders out there, and Deribit has had decent activity in terms of Bitcoin options, but not a ton. The biggest day since our last show actually came pretty much around the heels of our last show. It was the 3rd, so a week ago. Right about 60 million in terms of notional trading on that day. That was pretty much the biggest day of the past week. The rest of the days were pretty much 30 million or less, so pretty much half of that. So the big day was during our show, so maybe we talked up a little bit of volume out there over the course of the show. Same thing, looking at the volatility term structure, implied vols actually come in a little bit out there, I think maybe as a result of some of these interesting developments we've seen out there. But looking at the term structure here, it was much higher in the at-the-money out there, and the implied, it was about an 85 last week. It actually looks like about a 74 or so right now, and the high point still is the end of June contract in that term structure. It actually tapers off a bit into the low 70s as you get out into September and December. Remember we talked before, all that impacts the probability of it expiring in the money. Pricing it off these options here, it looks like December has about a 25% chance of expiring in the money. Again, the implied vol comes in a little bit, so that's why those probabilities are changing from last week. Also changing was the call to put ratio down markedly. It was at a 63 this time last week. This week down to 38%. So as we rallied to 9,000 and dropped back down to 8,000, looks like some of those calls came off the table. Go figure. People want puts when we're dropping, Jason, all the way down from 9,000 down to about 7,500 or so. So that's why that call to put has dropped markedly. In terms of open interest out there on Deribit with the options, a little bit north of 400 million, pretty strong. It's one of the, not quite the highest it's been. It's like the highest it's been was around close to 500 million back in late May, but still pretty robust and higher than it was pretty much the entirety of April out here. Let's move on out here to the futures out here to see. We're actually a decent, actually a fairly light volume day. Only about 3,000 contracts are on the tape coming into showtime. But as I mentioned, you know, May was a good month for Coinbase, also a good month for the listed futures over there at CME. In fact, pretty much the best month they've ever had. Nearly 300,000 contracts were traded over the course of that time. ADV up to 13,600. Remember, this is the 5-coin contracts. That's about a little bit north of $500 million worth of notional value, or 68,000 equivalent Bitcoin up there. If you can't do the math there, that's up over a quarter, 27%. And April is already a record month, and now May another record month on top of April. So things are pretty good. We mentioned on the 13th they had that single day record, 33, almost 34,000 contracts. That's nearly 170,000 Bitcoin out there, which again is kind of a sign that maybe the institutions are interested out there. Of course, speaking of institutions and futures, we talked about Cboe getting out of the space. Well, that day is coming up. The last contract expires on the 16th of June, listeners. So we're pretty much out about less than a week from now. Cboe will be officially out of the business. You know, Jason, I'm curious your thoughts on this. This has been an ongoing drumbeat. We talked about the institutional demand earlier. A lot of people really got up in arms when they saw Cboe getting out of the space. They said, okay, that's it. That's the death knell. That's the canary in the coal mine, that there really is an institutional love for these products. Because if there was a market, there was money to be made, Cboe would be doing it. And so that was kind of, I never really agreed with that narrative, but it was a very prevalent narrative out there. I'm curious, you're a former Cboe guy yourself. What are your thoughts on Cboe's hasty entrance and indeed exit to the space? And does that really significant? Is it significant of anything more than they just had maybe a flawed product? Was there something else going on there? What's your take on all that?
You know, I think that it definitely has to. There are more things at play. The merger with Bats, the things that they're doing as they refit and improve their offerings across all financial assets, and I think that they recognize that they weren't winning the battle against CME and that there were some issues with the product, and if they were going to retool, it didn't make sense to add more open interest to then only have to reconvert or run side by side or do things. And I think that they used the timing of this to coincide with some of the initiatives they have coming to play in October and at the Q4. And I would not be surprised to see them enter into the space again once they've fully integrated with BATS and that infrastructure, what takes place there.
People forget they are a partial owner of ErisX as well, so they do have some skin still in the crypto game, even if not a a directly listed product. Speaking of those futures, you mentioned all the different things you guys do to mitigate your risk. Are you guys big users of either the, not Cboe anymore, but of the CME futures over there?
No, because we're trading primarily OTC, and we have physical, right? We're dealing in loans against the physical asset. So the futures don't always help us. They're more of a litmus test to see where institutional flow is, how the markets are moving. We're trading strictly physical, whether it's physical coin or options denominated in the physical.
It does seem like the new wave of venues and products that are hitting the market are waiting for regulatory approval to hit the market soon. They do take that into account. They all are planning to expire into the physical. Is that kind of what you guys are waiting for? Is that a product that has a much more of a use case for you guys?
Absolutely. At the end of the day, our collateral is the physical coin, and we need, from a risk perspective, we need to ensure that we're matching our liabilities with our assets, so to speak. And so if we're going to hedge, we need to hedge with something that settles into physical. It's at any real level, you need to do that. You can certainly bootstrap a futures product, but that doesn't necessarily equate to good risk management on a much larger scale.
Yeah, that's definitely what we've heard from more than a few players. They're waiting for something that expires or settles into the physical for them to really make it worth their while. Meanwhile, it's time for us to keep on rolling into the other part of the marketplace, everything but Bitcoin. It is time to roll on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show where we get into everything but Bitcoin, except for the beginning here where we talk about market cap. Then, of course, we got to talk Bitcoin because that's the top of the list. Remember, these numbers are a little bit dubious, depending on how you believe that bitwise data in terms of market cap. I'd like to get your thoughts on that in a little bit as well, Jason. That's kind of a contentious issue in the space as well. But at least gross market cap numbers right now coming to Showtime. We're seeing Bitcoin, of course, number one with about 141 billion. Number two, ETH, right around 26 billion. Number three, XRP, about 16 billion. Number four, Litecoin, right around just a tick under 8 billion. Round out the top five is Bitcoin Cash with a tick under 7 billion. It's pretty much been a mostly down week on most of the major altcoin this week. Listeners, let's start with our old friend XRP. Seemed like Ripple, seemed like it had done it. It had broken out of that. You know, people had thought there was maybe a bit of a ceiling on it because of all the other competitors coming into the space, like, you know, the JPM coin and everything else. I thought maybe we had seen a little bit of the writing on the wall. For XRP, it was locked in this 31 to about 35, 36 range seemingly forever. And then it broke out of that recently, got up into the low 40, it was in 44 cents last show, and now it's back down, listeners, back down about a nickel to about 39 cents coming into Showtime. Still not down in the low 30s where it was, but not quite in the lofty highs. ETH following suit as well. It was threatening 260 on our last show, right around 259. This week coming at Showtime at about a 242, so right about 17 handles below where it was this time last week. The winner still continues to be Litecoin. Litecoin is the big winner of Q1. It seems like it's going to be percentage-wise the winner probably of Q2 as well when all is said and done. We're at the highest level right now. Just broke 125 at 126. That's up from 111 on our last show. That's the highest level in over a year since the end of May of last year, pretty much. Again, we talked about the halving before and the impact that could have on a lot of these coins. Well, the halving is approaching in less than 2 months. For Litecoin, that's undoubtedly why this thing continues to rally in the teeth of everything else selling off. It's going to be halved from 25 coins to 12 and a half coins on, I believe it's early August 8th. So all of that the impending halving seems to be keeping Litecoin on the upswing. Bitcoin Cash, one of the other major altcoins that is trending to the downside this week, down to about 391. It was at about 416 on our last show. And we talked a lot about Bitcoin, Jason. That's kind of obviously, that's what leads the dance. That's what gets everybody in the door these days. I'm curious for you guys, are you lending for other assets as well, or is it exclusively Bitcoin right now?
No, we'll lend for other assets, and we get a lot of interest in I'd say the top 10 people who come in, and as long as we can do some kind of option structures, we actually just did one for Bitcoin SV. We've done them for ETH. We basically will lend against any asset where we can create a structure that mitigates risk and produces income. And so when people are willing to make those markets, and that's the Chicago community more or less, we can trade there. So we're agnostic. I don't profess to be a be a guru when it comes to which protocol is the best or which methodology is the best. I know options, I know risk management, and that's what we do.
We launched a show in the early days of it with our friends over there at Acuna Capital. They had they do a lot in the ETH options on the OTC desk. Do you work with those guys to create some of your structures?
Yep, those are one of our counterparties. You know, we have about 10 people that we'll deal with in the OTC space right now, and try to figure out who has an axe at any given time and what works for our customers.
And how is that these days, going out there and navigating the OTC market for liquidity to hedge some of these positions? Is it still a challenge? Is it getting a little bit better? And also, once you get beyond the Bitcoin into something like an ETH or a Litecoin, walk our listeners through that. How challenging is it to really find meaningful liquidity in those products as well?
It's always challenging. Obviously, when you're not dealing with a centrally cleared product, there are challenges that are embedded in that process. So at the end of the day, you really need to understand the flows of the market as a whole, understand what people are trying to do and why they're trying to do it, and then who has access to those end users. And going in that universe, whether it's the Acuna guys, there's Galaxy guys in New York, there's some overseas players, and then you have to be willing to transact with them. And so understanding what their flows are and what their book might look like without knowing, nobody wants to show their cards, but having a sense of what positions they're holding and how that might help you or effectively help our customers.
So in a very real sense, the size of your loans then is going to be capped somewhat by the size of the OTC options market, because if you can't find a hedge, I'm assuming you're not going to go out and loan hundreds of millions to someone if you can't get commensurate size, which I'm sure it would be a challenge right now to get commensurate size of some of those in some of these OTC markets.
Absolutely, and that's we're all growing this. I know it's an overused word, but this ecosystem where flow begets flow, and everybody needs to work together. It does me no good to run over a counterparty, and conversely, if somebody runs us over, the phone doesn't ring for them. It goes both ways, and so you have to be a good participant in the marketplace. It's kind of like back in the old days in the pit where you didn't want to make anybody upset. You wanted to make sure you were a reputable actor.
Yeah, you carp the guy next to you. He's going to remember that when that comes around.
Exactly.
Comes around again the next time. So, Jason, when we're talking about all these SKUs and things and these options on the OTC side, that's you guys. You guys are out there buying the put SKU and doing the call SKU and everything else. So that's all. I can all trace that all back to you now, Jason.
Well, thanks. We're definitely one of the participants. We're not the only one out there.
I can say, put SKU's up this week. Jason's clearly buying puts this week. That's that'll be our indicator here going forward. If you're going to go forward, I want to get forward to some of your questions, a little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions, the segment where you guys pretty much take the reins with your questions, your comments, your insights about the world of crypto trading. Let's get to pretty much everything crypto. You guys have everything on the brain out here. Let's kick things off. Last week, Jason, one of the ways to truly guarantee that Bitcoin is not going to stay right where it is when we post a poll about pricing on it, because that's the second. It was exactly 8,500 when we posted our poll a week ago, and it did not stay there for more than a few minutes. Because we asked you guys last week, listeners, we said, hey, Bitcoin at the time we posted this, hovering right around 8,500, almost exactly. So we asked you very quickly, very easily, make it end of month, kind of end of June expiration option. If you had to make a trade, would you want to buy a call right around the 9,000 call? Would you buy the 8,000 put? Would you sell the 8,000 put? Or would you have some other? I know a lot of you guys wrote in with your others, doing the iron condors, and we love all of that. Thanks for all of that. But the winner, go figure, when it broke through. Well, first it was the 9,000 call was doing pretty well because it threatened 9,000 very briefly. Then the 8,000 put got back into favor and ended up winning, but only by a slight margin. 34% of you guys saying you wanted to buy the 8,000 put. Hot on his heels, selling the 8,000 put, 31%, Jason. That shows we got some hardcore premium harvesters in our audience out there. 29% saying they wanted to buy that call, so still some holders out there have the upside. And then 6% with your other. I guess that's not exactly surprising, Jason, given the fact that we broke 8,000 not too long ago. But I'm kind of surprised that it's as even as it is. Maybe that kind of shows you what we're at in the crypto space right now, where there still is kind of there's no unanimous opinion at all. There's no clear dominant skew driving anything. If our audience is any indication, at least, they're kind of almost equal on all. Does that surprise you at all, or is that kind of what you're hearing from your clients?
I mean, that doesn't surprise me. Everybody has an opinion, and they kind of tend to coagulate around certain strikes. It's a great place to be a market maker. This goes to the professional segment of your audience who says, hey, I've got buyers of puts and sellers of puts, and I can transact there all day. And that's, fostering liquidity, which is what I want at the end of the day. Talking my own book here a little bit.
Yeah, liquidity. The more liquidity there is, the more you can lend, right? So it's a worthwhile. You don't see a lot of bankers coming in here, who are tied to the OTC options market for their liquidity, which makes you guys certainly unique in that space. Speaking of lending, let's talk here. Got a question. This is kind of up your alley here a little bit, Jason. A question from maybe YNGBLD with an acronym. I don't know. YNGBLD wants to know, why are the margin rates for Bitcoin futures so extreme? Well, he's getting, of course, to now only the CME futures are left, but I think back in those heady days, Jason, seems so long ago now, end of 2017, everyone was racing each other to launch a future out of the gate, and I know the CFTC and the SEC were both kind of looking askance at these new products, so I think to appease them, because remember, CME self-certified, as did Cboe. I think to appease them, they made it effectively a one-to-one type product. There wasn't a lot of margin to be found in those products. They haven't really changed that much since. Has that surprised you, Jason? And B, maybe that's a win for you guys. Maybe you guys can drive some business that way. Maybe if you have any thoughts for our friend, Mr. aptly named YNGBLD, he wants to know, why are the rates for margin so extreme right now?
It goes to volatility. You were talking about the realized vol numbers prior to this, and they're very high relative to every other asset class. If you want to trade gold doesn't move that much, although recently it's popped.
Maybe the last week, not so much, yeah.
Traditionally. So when you look at how these assets move, at the end of the day, it's no different than if you were borrowing against your home and your home moved 50% in a 2-week span. A banker might be a little reluctant to give you that kind of a loan. So it's just a function of price action. And it's funny, the same things that we all love about crypto, the movement, the price action, the volatility, are also the things that don't allow for leverage and don't allow for people to step in and offer that. That's why we use options and we use risk management tools to effectively allow the return of principal.
That's kind of the odd catch-22 of the product, the volume, the liquidity, that brings people to the space, but it also makes things a little bit less accessible sometimes as well. That's kind of the downside of the almost 100 realized volatility we were just talking about earlier in the show there, listeners. We got another futures-oriented question. It comes from LNT. They want to know, does the recent explosion of Bitcoin futures volume on CME plus the data from bitwise make you reconsider the impact of the futures market? Is it more relevant than anyone thought? Does this mean we might see an ETF sometime? So this kind of gets back to what I wanted to pick your brain about as well, Jason. This is kind of an interesting, somewhat controversial topic. He references here the bitwise data. That was a big report, came out a few months ago. You probably saw it. They pretty much came out and said effectively 95% of the quote-unquote volume that we're seeing out there is effectively faked. It's double counted. It's dubious. And so if you believe that analysis, and really only 5% is left, something that's doing 33,000 contracts and over 150,000 equivalent Bitcoin, that's a much more relevant product than it was when the other rest of that volume was out there dominating things. And of course, the Bitwise guys have an axe to grind. They want to get an ETF listed. That's why they're making that argument. He's asking, do you think we might see an ETF more quickly as a result? But I think before we even get into that, I'm curious, Jason, I want to pick your brain a little bit on that topic. Are you a believer in that Bitwise study? You think it's maybe hogwash? Where do you fall on all that?
Well, I didn't get into their methodology. I certainly saw the report. I will say that from experience, a vast majority of the volume trades OTC, and that doesn't show up on an exchange. There's no printing mechanism. In traditional financial assets, if I block trade something, it still has to print somewhere. We don't have that in crypto. And so while you might see double, triple, quadruple counting on exchanges or their wash sales, I don't think people are necessarily doing them as a way to pump volume as much as they are, that's transactional. But when you need to move size, nobody goes to an exchange and says, hey, I need to sell 2,000 BTC right now, or I'm going to buy, 100,000 ETH or whatever the number is, that it doesn't trade that way. And so at the end of the day, it trades OTC. So while the volume numbers may be that you're pulling from the exchange may not be 100% accurate, I do think there's volume that's trading out there. As far as the futures in a lot of ways are a layoff. If I'm an OTC desk and I take down a large order, no different than in anything else, trading the S&P 500. It's easier to sell a future than it is to try to sell all 500 stocks. So you'll see a big trade go down, and then you'll see a carryover effect to the futures, and then the unwind happens. So I think that what you're seeing is the CME futures or other futures on other exchanges or venues are available, you'll see flow there in terms of moving liquidity quickly.
And the last part of his question here, do we think this will make us maybe accelerate the ramp up to an ETF? That's kind of the other question we get a lot, Jason, is, will there be an ETF soon? Do we really need an ETF in the market to make this a quote unquote big boy market? Will that really make it happen? So do you think this data and the volume we're seeing in the futures, is that kind of 1-2 punch? Will that lead us to maybe seeing an ETF sooner rather than later, Jason?
Well, I'd like to believe so, but at the end of the day, I don't want to put words in any regulator's mouth and
just you and me talking, Jason. Nobody's listening, no regulator, just you and me in a room, nobody else.
More volume is always good to show market commitment, market depth, and the ability to offer a product for more general consumption. And so the increase in volume definitely goes a long way towards making that a reality.
Well, unfortunately, listeners, that music means it is time once again to draw to a close our crypto rundown for this week. What a fascinating journey it has been. Jason, I want to thank you for coming in. Give us a perspective we don't get very often here on the show, or really ever, which is on the crypto lending side of the space. But before we go, we've had a very long, very far-reaching conversation, but maybe you're saying to yourself, I forgot to mention this one thing, or maybe you want to leave our audience with a little bit of a hint, a little bit of a tease for what they can expect from you guys in the near future. Now is the time, sir. The floor is yours. Absolutely. Well, I would say that anybody who's interested in trading options, we can certainly help facilitate that as a CPO and a CTA. And I think in the future we will have some products that are available out there that may allow people to do some different things, better things in the crypto space than they currently have the option to do. And Jason, people want to learn more. They want to kick the tires for themselves over there at Drawbridge. Where should they go? What should they do? Go to drawbridgelending.com and just sign up. Send us a note, and we'll get back to you right away. All right, check it out. Drawbridgelending.com, listeners, is the place to go. And on behalf of Jason and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, or sending in questions. For all the other fun stuff that you do, keep it coming. And we'll see you back here next week for more of the Crypto Rundown.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.